Alright, ladies and gentlemen, thanks for joining me in this part 2 of this trade analysis. What we'll do, we'll go through these 10 or so stocks on the left hand side of my screen. We'll start with eBay, we'll finish with Zinger, and we'll go through some analysis on these top 10 shares. Before we go any further though, if you are interested in learning how to do this for yourself, have a look at our website, pivotpoint-trading.com. Again, you can find free information on how to trade stocks and also options in our free A1 level trading course. So what I'll do, I'll start with eBay. As you can see with eBay, we're starting to form a little nice bottom here. It could be a little bit of a double bottom. Very interesting at this very strong macro support level. You can see for the better part or since December 2012, every time we've come down into the support level, it's been a fantastic buying opportunity for the next oscillation high. You can see the amount of times anyway that eBay has bounced from this location and has moved higher. So what we have done anyway is set up a trade at $52.85 on the bullish side, and then we have got three targets, 1, 2, and 3, $55, $57, and $60 a share for eBay. If in fact this support level does not hold, if I just zoom out again and we get a close below $49.12 or $47.91, then we're trading down to at least $45 a share, and then we're moving as low as 43. If I just change to a line chart so you can see this, then we're moving down to 43 and ultimately $38 on eBay. It doesn't matter which direction eBay wants to move. We're set up to trade the directional move, whichever direction that is. So what I'll do, I'll move into Facebook. Now Facebook looked to be moving into a little bit of a symmetrical triangle. It's not a textbook symmetrical triangle, but it did fit the actual shape and the picture. What you can see is that we're starting to break out, but if I change to my template number 6, we're actually in what we call a Bollinger Band squeeze, starting to become established. Again, it's not a textbook Bollinger Band squeeze. We do want to see these volatility bands coming closer. But if we do start breaking above $65.14 or down below $53.30, then we have a really nice trade opportunity on Facebook. 1 on the bullish side up to about $73 a share, and 1 on the bearish side down to about $46, down to the support level, which dates back all the way to September 2013. It acted as resistance and then support in November 2013. So that's a basic trade setup on Facebook. Gillard Sciences, no real bullish trade setup unless we get above 85.31. This is a very bearish candlestick pattern right here. It's what we call the one black crow. It's the second strongest candlestick reversal pattern, or at least an early reversal signal. So that is telling me that potentially we are getting set up for a rollover. Now, again, it's too premature to be looking at that, but if we get a close below $79.08, we'll be moving down to $75 and then also $69.90. So keep an eye on Gillard. It's not there yet, but it is definitely poised to break out. Here's IRM. Now, this is something which looks good. This looks like a little bit of an ascending triangle, a little bit of a wedge or ascending wedge shaping up. If we break above 30.56, nice trade opportunities up to 31 and also $33 up here, trading in the direction of the open window and the way that the moving averages are moving. Let's move into MA. Now, Mastercard did trigger as of Friday. We're up here at 76.25, only 20 cents at the moment, built into intrinsic value, but we've got our targets here. One about 78.50, which is a nice, $2.25 move. Then we've got a additional entry at 79.94, trading up to here, this old resistance level, looking at about $84 a share. So that's definitely a really nice trade setup on MA, and it's something that we've been triggered into. So we'll keep an eye on that individual share. Let's move into MU. This is Micron Technology. Again, it's a little bit funky because of earnings. Actually, not earnings, just because of the basic price movement. We got a nice little breakout, a little pullback into support, and now we're starting to bounce again. So how do you trade this if you are in the overall trade? What we'll do is we'll move the bullish entry up to about $27.85. Target is going to be up here, just shy of about $29.20. Really nice trade opportunity on MU. In case we roll over and start breaking down below support, these little intraday lows, then we've got a bearish trade set up at $25.15. So that's also a very nice trade on my radar. Let's move on to Tesla. Tesla's been quite incredible. We had a really nice gap down. We had a very strong shooting start, this very strong support level. You can see this one candlestick here, that was earnings, very nice volume gap, but since then we've just been struggling each and every day on low volume, but definitely I guess substantial volume, just really reversing the gap down. And now we're just trying to trade bullish against these exponential moving averages. Where we're trading at the moment is really going to be the telltale signal as to whether we're going to get a rejection or if in fact we're going to break out and trade bullish. This is a really easy trade setup. If we bring down our bearish entry to about 192, That will cover us if we get a rejection and breakdown. Let me just change to the 3 simple moving averages. Yep, as you can see right there. And then if we break above $222.30, we're looking at targets up about $245. So let's move into Twitter. Twitter was something that we had a couple of weeks ago, which is quite incredible. I do believe it was down 19% on some put in the overall equity price. That translated to some incredible results trading put options. And since then, it's just fizzled out. We could be setting up a double bottom, but there really isn't a trade opportunity in Twitter until or unless, we start breaking below $29.02. All right, so that's something that it's coming to us, but it's not exactly there for the time being. Yahoo. Okay, it looked to be breaking down as of last week. We had a quick reversal. Now we're starting to move bullish. $35.07 looks the goods, trading up to this old resistance level, about $37 a share, up to about 38, and then also 41. Looks as if it could have been a little bit of a false break. Nice volume coming in on the bullish side. We still need to get above that 50 as well in this gap here. So this 35 is an aggressive entry. It's more so for day traders. It's not really something that you'd want to get involved in for swing traders. Zynga, again, is breaking down. This has been a really good share to trade, or optionable share to trade. And here we are, we're right on the corner or on the edge of breaking down below $3.21 a share. So if we get that movement below, then our next real support level comes in at about $2.80 a share on Zynga. So that looks incredibly bearish. No bullish trade set up on this individual stock. So ladies and gentlemen, this concludes our second or part 2 update. Thank you so much for watching this individual trade analysis. Again, if you're interested, schedule a phone call or at least email me, touch base, and let me know that you are interested, and then we can go from there. So thank you so much, everybody. Have a great long weekend and a shortened trading week Tuesday throughout Friday. All the best. Goodbye.